Welcome back. You're watching HFO-TV. HFO-TV is co-sponsored by the construction, repair, and restoration firm J.R. Johnson, the real estate law firm Baljanik LLP, the tax deferral accommodator Butler Exchange Group, the mortgage banking firm Gantry Incorporated, and forensic building consultants providing building structural science services.
Hi, I'm Greg Frick, partner at HFO Investment Real Estate. Welcome back to HFO TV. Today we're lucky to have with us Dr. Michael Wilkerson, partner and senior economist at ECONorthwest. We've had Mike with us many times over the years discussing economic trends affecting the region from housing to employment. So Mike, I know it's a busy time. I want to thank you for taking the time to sit down and give our audience some insight as to what's going on in employment, permits, multifamily market, and single family. So again, thanks for taking the time to do this. Let's just jump right in and talk a little bit about kind of what the data is saying regarding employment, growth, what we looked at job loss and things like that since this COVID pandemic started over a year ago.
This has been a rapidly evolving, I think, market, and understanding specifically multifamily is a long-term, right? As we know, many years development pipeline. Like, what does that mean when something like that happens? And we can really see some of that in the data. And basically, from a jobs standpoint, we fell off a cliff and we've slowly been recovering, but this is very different than certainly the last cycle we saw, right? The last cycle took 2.5 years to lose all the jobs and 5 years to regain all of them. And so, this feels like we're happening in warp speed. So
Mike, I've got a question as an economist. When you guys are, you're kind of looking at history, is there a historical context to how severe and, you just typically will not see drops of employment that are, basically, vertical, so to speak. What do you get as an economist? What do you look back to as to, or maybe this, maybe there's nothing to look back, and we're kind of in uncharted waters as to what happened and what the recovery will be.
Yeah, there's no great example of this. Typically recessions are slow developing. People kind of see it happening beforehand. Some people don't, but others, call it. Here was kind of like, let's shut down the economy. We need to do it, but we'll be back quickly. And we had all these discussions about, V recoveries, U-shaped recoveries, et cetera. And I think now we're all realizing, that didn't unfold like we had thought. We don't know exactly what all the stimulus did. It certainly made things better, right? But what would have happened absent it? Could it have been worse? I think it arguably could have. The word you hear typically is unprecedented, right? Yeah, I hear it daily, but it's not really unprecedented other than the job loss. Like, we've been in many of these market conditions before. It's just the pace at which the jobs were lost is something and then recovered, right? A month later, had this huge bounce back. Since then, we've been very typical, right? Just slow changes up and down in what we've been seeing.
So the amount of job loss is not unprecedented. It's more just the velocity of such. And so,
yeah, in the Great Depression, I should say, there were more jobs lost. In the Great Recession, the last cycle, certainly fewer jobs were lost. But now we're kind of right around where we were at the depths of the last recession. So again, for people who have lost their jobs, this is an extraordinarily painful and going to be slow, but many people have kind of continued operating similar to how they had before, albeit in a remote, oftentimes environment. Right. But all the government stimulus, et cetera, you look at incomes in general are up across the board. Certainly people disproportionately favored on, lower income households are bearing the brunt of this, but on average, incomes are up, and that's entirely related to all the various CARES Act, ARP, et cetera, programs that have, on average, contributed between 5 and 7% to people's household incomes. And so,
on average, savings rates are up.
Savings rates had never been higher than earlier on, and are continuing to remain elevated. So you look at a lot of data, and you cannot see a recession. Like, you look at incomes are up. You look at savings rates are up. You look at consumption now, consumption's higher than it was before. And you're like, that doesn't happen in a recession. So really this is, I've heard it, called basically a jobless recovery. And that's largely in part due to all the government stimulus. So the question will be, what happens when the stimulus stops? I think the presumption is this is the last of the large packages. But you'll see that, the quick recovery in jobs has started slowing. So what's going to unfold now over the next 2-3 years is kind of what the state economist in Oregon is thinking it will take to get back to employment levels that we saw pre-pandemic.
Gotcha. Okay.
I think The number one thing that I would say is impacting Portland broadly, but specific to multifamily development, is news coverage. There's a variety of articles happening on a near daily basis. Some of them are local, some of them are national in profile, but the perception of what is happening in Portland, right, by people around the country is having a variety of impacts, particularly in the investment side of the community, right? For institutional investors, they're saying, is this a place we want to be investing? And if the returns aren't greater here than other places, then I think there's a flight to kind of what is perceived to be less risky markets, and that's having a lot of effects, and particularly also on kind of the hospitality sector, right. Restaurants, food and beverage, all that, in terms of getting us back to kind of where we were. So that I think is a general context, and you can look at some of the data here by Travel Portland. Typically Portland's been perceived as an appealing place to vacation. Similarly, Invest, ULI 2-3 years ago had Portland as a number 3 development market in the country for multifamily, and then dropped down to the 60th. There's been a myriad of news articles written about that. I've been talking about that for a while, but this is now more current data that shows, okay, it dropped, it was pretty bad, but we're starting to see, in terms of perception, a little bit of a recovery to where now that the unappealing numbers are dropping, appealing is increasing, certainly not back to where it was, late 2019, but heading back in the right direction. And I think why this matters probably more so now than ever before is our natural growth rate. So effectively, and this was precipitated by some increased deaths due to COVID, but the trend was known now for 2-3 years that the number of deaths was going to be greater than the number of births statewide. So effectively, the only way we're going to grow in Oregon is 100% through migration. And so when you start to have negative perceptions about what's going on in the market, that can have pretty serious impacts if that's the main mechanism for growth.
If your growth is all based on, not just based on migration, that's going to be a big issue. So
yeah, absolutely, much more so than it was even 3-4 years ago. So that's an emerging thing to kind of look at.
Now, Mike, is that unusual? Or are we an outlier on that? Is that pretty predominant, in the Pacific Northwest, the West Coast, in terms of seeing the progression of deaths, Oregon natural decreasing? Is that news?
I would say it's atypical for a state. Our age profile skews much higher. Part of that is retirees, living here and fewer children. But if you look at a state like California or Idaho, their natural birth rate or natural growth rate is positive. Washington is much more like us. But I think this is, you see this in some European countries, kind of just been happening as the baby boomers, ease into retirement. Starting to happen more and more, but particularly in Oregon, that's been such a huge growth state for many years, is now basically going to grow only through domestic and international migration for many, many decades. I think we've been lacking good government data on what's been happening, and you just hear news stories about mass exoduses from places. This is a report that came out, I think, a couple weeks ago or last week from CBRE, where they got address change data from U.S. Postal Service. I don't know that it's 100% accurate, but it's a lot better than the 2019 data you have from government, in the sense of they looked at the top 30 markets. And you look at San Francisco, New York, Seattle, LA, there was a mass exodus in the sense of more people leaving in 2020 than in 2019. But Portland is kind of that inflection point. It's ranked 20th of the 30, barely had any change, a slight change, uptick in migration. So, no big change there. But I think the good news is it's not nearly as bad as Seattle, but conversely, I think maybe a decade ago, Portland would have been more like an Austin or a Columbus or a Sacramento. It would have been the recipient of that migration out in previous recessions. As we saw last time, we saw a huge influx of young, educated migrants in the last cycle, and we didn't see that, at least to date, in the pandemic. So I think this is, again, in line with what you're seeing on that migration side of things. Is what does this mean for demand going forward? And it's not catastrophic in the sense of what you're seeing happening in some other urban cores, but it's certainly not a positive outcome.
Because we're the benefactor of the out migration of LA, San Francisco, Seattle. We'd be on the higher part of the scale. But as you said here, we didn't necessarily go negative, but we're kind of that watershed mark of kind of net neutral, whereas these other cities are now kind of replacing us as where people are migrating to. So
yeah, and Boise is not on this list because it's not a top 30 market, right? But Boise would be off the charts.
Yeah.
There's huge amounts. So I think, if you wanted to look at what Portland was doing circa 2012, 2013, that's probably what Boise is seeing now. And then we're much different.
And we're seeing that in terms of talking to capital where they want to go. And, Boise feels a lot like we were, coming out of the recession and, 9 and 10 and 11. Boise's kind of got the same talk. Austin's kind of always been there. It's ramped up a little bit. Same with Salt Lake. So.
Yeah, no, absolutely. I think some of these other West Coast markets are certainly filling the void for what's been, definitely less capital coming into the Portland metro. I think one of the hypotheses that you heard was this is just a massive flight to rural markets. People are fleeing the urban cores and they're going rural. And this data that CBRE put together kind of tells that story, but maybe to a little bit lesser degree. The flight from the urban centers, for sure, you see that's that big drop on the left-hand side. But when you look at the semi-rural and rural, early on, you saw some of that. But in the last quarter of 2020, there was a reversal. I think people were realizing maybe that was an overreaction, that like this isn't a permanent thing. Maybe going to the office isn't terrible. I don't want to work remote forever for the rest of my career. And maybe that wasn't, the best thing. So you're seeing, though, these kind of suburban and urban peripheral places being the beneficiaries of that growth. I think that will have a lot of bearing going forward in terms of particularly multifamily demand of like where you're seeing that building. Is that not happening in a central city? Is that now out in Vancouver, other suburbs? Is that happening out further on Division and in other places? What does that look like in terms of where people want to be? I think this is an early indicator of some of that. And you'll see I have some rent data as well. The rent data and concessions is kind of telling a similar story.
And I figured we would see some, even without COVID, we would have seen some increase kind of going rural, just from the standpoint of as millennials are aging up, having families you're going to see. But I do think it's overstated the, whatever you want to say, the death of the urban core. I mean, the same reason why people are moving into those urban cores beforehand are still going to be there. This is almost like a little blip in terms of we had a little bit of shift. Maybe all of them don't come back, but there's still going to be that drive to come back into, where the amenities are, restaurants, services, and things like that.
Yeah, I mean, I think if you look at a place like San Francisco, let's say, like that's total, or Manhattan, totally atypical. Like, yes, people want that, but they don't want to pay that much for it. But when they had to be in the office every day and the trade-off is a 3-hour commute or that, then people would pay. But so for tech workers particularly, and you see that in data, but for a place like Portland, that's not really the case. People like typically walkable environments. And so we're lucky in Portland that we have, a lot of amenities, not just in the urban core, but kind of broadly in many centers now. And so you're seeing that in some of the data here is, and frankly, in the development patterns were already trending this way pre-COVID as well. So, you kind of get an alignment of people were already seeing some of these trends emerging prior to anything COVID related. This question I get daily from staff internally and just in every presentation I do is, are we forming another housing bubble? And so
you get the same question.
Schiller to me is probably the economist who's consistently called bubbles correctly, right? He got the tech sector bubble, he got the previous housing bubble. So here he had a headline in New York Times, the housing boom is already gigantic. How long can it last? We're experiencing the greatest housing booms in US history. I think a lot of people think this was like written this week. This came out in 2018. So he's been calling the top now for over 2 years, no sniff of anything COVID related. And, yes, there is some truth to the fact that housing prices have gone up, but I think the fundamentals supporting that are entirely different now than we've ever seen before, in the sense of credit underwriting standards are much higher than they've ever been. Yes. The amount of equity people have in their homes is higher than it's ever been. You're seeing very, very little equity extraction through HELOCs and cash out refinances than you saw in previous cycles. People are actually paying down debts during this recession, which is extraordinarily atypical.
So Mike, if you just for a second, when going back to that, like pre back in the 06, 07, 08, at that point we were seeing, again, we don't do single family, but it's kind of indicative, heat locks and, 110% loans and things like that. We're not seeing it in this cycle or coming out of it. It's just a matter of pricing's gone up. People have more equity. Yes, interest rates are low, but, I think a lot of it, we'll get into, is a lot of it has to do with supply. There's just a lack of supply for these houses. So.
Yeah, no, exactly. I mean, you're right. I use single family just for contextualization around, like, it's a substitute, right? So when the housing market is going crazy, then on the single family side of things, that spills over into the multifamily side of the equation. And particularly now you're even seeing kind of some institutional capital moving into the single family purpose rental business, right? They're buying assets for the purposes of renting them as an appreciation play. So I think you are starting to see some kind of new emerging funds out there. But when you look across the board, 2019, you had some markets, Seattle and San Francisco notably, actually dipped negative, right? So if you're Schiller sitting there saying like there's a bubble, you saw very little in 2019 that would lead you to believe that was the case.
Right.
And then in 2020, in every single market, you're basically hitting 10% appreciation or more now. And we saw this happening all throughout 2020. Home builder confidence is dipped a little bit from where it was, say 3-4 months ago, but it's still higher than it has ever been before. And so you look at the NEHB, the home builders are saying like, yeah, let's keep building. We don't see any risk here. And granted, they typically, sometimes are a little bit overconfident, but given where we've been, the fact that they're more confident now than they've been throughout the entirety of, let's call it this cycle, because from a housing standpoint, you never really had, other than a 2-month dip, right? We're just continuing to build more than we built in 17, 18, 19. This chart to me is the one where it's like, where's the pandemic, right? You look at this is number of homes sold. You have cyclicality every year happening, right? So this is the Portland Metro. You look at March of this year, more homes sold in March of this year than in 20 and 19. Looks exactly the same.
Right.
Then you layer on homes listed for sale. And this is where like PhD in economics not needed to see where problems happen. When you cut down the number of homes listed by more than half or a third of where they typically are at this time of year, you have complete chaos, bidding wars everywhere, less than a month of supply, average days on the market is a week, everything selling for over ask with multiple, at all price points. And that's different than we've really even seen in previous run-ups of 15, 16, 17 on a single family side. So this is very, very atypical than you would see in terms of market conditions, even when markets are hot, just this few number of listings.
Which I always think is funny because you hear it in the, when you hear it in the kind of the national press, they're always talking about the demand side, about the, pricing and, people going over asking and all this. And there's no kind of, well, if we look at the supply of how many are being sold, that's going to, there's a reason for that. When you said you cut it in half, that's going to be the expectation. So it's just interesting how it's played out nationally, or, do people really put that together? That yes, it is, people have more cash, interest rates are low, but also looking at, we just cut the supply of people out willing to sell, you're going to have these kind of bidding wars.
Yeah, because I think people look at like, yes, I can sell my house for a lot, but what am I going to buy? And
Definitely.
So you have a lot of people who I think are trying to buy, buy their home contingent before they sell because they don't want to risk that. And you can't do it because there's so many cash and other buyers out there that no one's willing to accept a contingent offer. So you kind of have this chicken and egg problem. This is a data that I don't typically see, but I think really starts to get at what we're seeing in multifamily. And what this is showing is the number of renters per home that's available for sale. And granted, not every renter is trying to position themselves to be a home buyer, right? But just to look at the ratio, there are 35 renters for every single home that's listed for sale. Way higher than it's ever been before. And so this is, again, getting at this question of like, what are the long-term implications here? This is a long-term implication. Like the number of renters can't go down because there's no homes to buy. And so as population increases in places like Portland, where we know the pipeline is drying up, like what is this going to mean? It's going to mean continued pressure, right, on the single family side of the equation, but similarly, a very clear signal to the market that we're not building, enough housing in general. And so here's how you start to see that. We've had this conversation now for the last 3-4 years. This was very clear. We knew as we started talking about inclusionary, as we started talking about rent control, as we started talking about tenant protections, all of, landlord registry, all of these things, it's like we already knew prior to any of that the market was going to deliver fewer units of housing over the next number of years. Nothing to do with the pandemic. And this has just continued to play out now to where, in the metro, we're at 50% fewer units under construction than we were a year ago. Like meteoric rise, right? But quicker fall. And in the city of Portland, it's even more. City of Portland was 60% of all units under production a couple of years ago. Now it's 45%, 2,500 units. And now granted, the long run context here is we're still well above, right, previous peaks. You look at the back last cycle, 2007, we're higher amounts in the metro than we were then. And so that huge increase to the number of units produced really was that capital infusion that happened that drove
Right.
plus migration that kind of got us to where we were. But in historical terms, the number of production we see today isn't worrisome. What is worrisome is the pipeline. Like, we know that this is going to continue and continue to drop by quite a bit. And so when you look at City of Portland, where you can look at, issued multifamily permits, there's like the permitting pre-approval process, and then they're actually getting issued. So this is looking at actually getting issued. There was like a near 70% drop in activity in 2020. So we can look out in 2023 or 2022, look at that previous chart right here and say, okay,
We're going short again.
This trend is for sure going to continue, because there aren't enough things. Like, even if you built permitted 10,000 units today, we're still going to feel this repercussion several years from now. And so I think what you're starting to see, and this is literally in the last 2 months, is an acknowledgement from some developers that they're seeing the weakness in the pipeline several years out. And through 2021, through the first 3.5 or so months, 3 months, you're seeing almost as many units permitted this year as you did last year. And we're on pace for close to 4,000. I don't think we're going to hit anywhere near 4,000, but there was enough of a spike in early 2021 so far in terms of permits issued or under inspection to be issued that we're likely to see more activity in 2021 and 2020. How much more? I don't know, maybe 3,000 units, but it's still going to be much less than we saw over the last period of the cycle. The key is we're just going to see the repercussions of getting 1,400 units permitted in a year, a couple of years from now. The best leading indicator we have is, the city calls it setup, but it's basically, pre-approval process. You could see in December, January, there was nothing going on in terms of multifamily. And now we're seeing, an uptick of 400, 250 units. So, less than we saw in 17, 18, 19 on a monthly basis, but back in line with kind of what we saw in the later parts of 2020. So I think I would say the trend is heading upwards.
Coming back, we've maybe hit the trough in 2020, which was...
I think we've hit the trough. We were kind of looking for how long we would see a trough. Now, coming up from a trough is easy to do, right? The question is, like, how much have we underbuilt during that period of time, and how much of the trough is going to account for the future growth? I still don't think we're on a pace to account for like just a sustained level of growth. Like, I think we still need to get back up higher. But the trough of what we didn't build in 2020 is going to have ramifications for sure, starting a year or two from now. Single family and missing middle. I think this is an interesting opportunity. I know this isn't necessarily where your investors are at, but I think understanding who the owners of missing middle as residential infill starts to happen is going to be an interesting question. Like, who wants to own a fourplex for the purposes of renting, right? Is that institutional capital? Probably not, right? I mean, REITs aren't really set up to do that, but it's an opportunity, I think, for people to, whether they occupy one unit themselves and rent out a duplex, tri-quad, whatever that might look like, I think is an opportunity to offset some of the multifamily decreased production. But I don't think you're going to see near the scale of increase in missing middle, at least in the first couple of years, to offset that reduction. But in terms of what we're seeing to date, single family has been much less impacted in COVID times than the multifamily market has. I think early on, on the rent basis, kind of everyone's rents went down, but then you saw a clear sorting happen where the downtown core in Portland continued to drop. It was down 6-7% at the end of last year and is now starting to come back up. But you look at kind of the market average is up year over year, and suburban markets are up 4%. You can see Clark County, Lake Oswego kind of leading that, and then you look at really it's downtown and Northwest that are kind of those two remaining places that are struggling. But across the board now, you're seeing rent escalation. And I think, frankly, this is going to continue and could get pretty competitive in some places because the pipeline for absorption is starting to get thin again. I think the key indicator that we're looking at is concessions. You're still seeing quite a few concessions, particularly in new construction as they're trying to get up to that market absorption level. So the blue line is, downtown, you're still seeing, almost 50% of properties are offering concessions. But it is down from that peak in late last year at, 70-80% of properties were offering concessions of some sort. So as those concessions, right, that's just the leading indicator of where rents are going to go. So you have migration still happening, right? You have fewer new units being delivered, right? You have vacancies staying pretty stable. It's only a matter of time before rents continue to escalate across the board again. And so I think this is, given where we're seeing incomes and employment kind of stabilizing, I think pretty likely. I think to me, the big question of the day is, what do we do about the eviction moratorium, back rent, et cetera? And sorting through how that might play out is going to have huge impacts in kind of where the market goes over the next year.
But again, that doesn't affect, though, with the moratorium, that's not affecting kind of where rents are. That's more of a collection issue, and I think a capital issue of, depending on how that's, which I think it will affect the rents in terms, I think it's going to prevent maybe more supply from coming in. And then you're going to, again, it'll add to this whole lack of supply with the demand issues. That's a big question. I always wonder politically, if do they, as we saw a lot of stuff get pre-done, pre-occlusionary, we talked about that many times here on this, pre-17, so we had the bump in permits. I finally sense there's maybe some acknowledgement that some of the stuff that's being put in place is affecting supply. It's not just COVID. I think, as you said, we were trending this direction anyway. Will we see kind of a shift of how do we get more supply in line? Everybody talks about it, but nobody necessarily wants it. Do I want more supply when it may affect the value of my home from a single-family home standpoint? So it's always an interesting dynamic between the we want supply and we don't, and how that affects my net income if I'm a homeowner not really in the business.
Yeah, I mean, I think that the piece of legislation that I think is potentially has the impact to change land use, and particularly planning around land use in Portland and broadly around the state, is HB 2003.
Right.
That legislation is really acknowledging that when you're planning for future housing needs, you cannot ignore the current state, which is to say, you can't just say we have a huge underproduction of housing today, including housing for the homeless. We can just pretend that doesn't exist and just plan for housing units going forward as if the problem will magically solve itself. I think we all know now that after decades of that not happening, it's not going to happen. And so through housing production strategies and that specific legislation related to how housing needs might be defined, I think is the first step in acknowledging right. The state's got to say, yeah, we have a supply issue here. We need housing that's affordable at a range of prices, right? In a range of locations, both urban and rural, and that we haven't been appropriately planning for that over the last number of decades. And that's that first step. And obviously the market conditions have to be right. And so you have regulated subsidized units that are going to be infinitely in need that can be built. But really from the market side of things, it's figuring out how to lean into the need for those additional units, whether that's adding density through, let's say, height or different types of units, or expanding the places where we can build housing. I think is going to be the combination of both those answers is really what we're going to need over time.
Mike, do you think you think that's going to come kind of top down, state down to the local? Because again, land use has always kind of been real kind of general on top, and then each local municipality kind of does it. But I think now there's an acknowledgement that that's not working in terms of delivering of housing. Do you see kind of, I know you guys do a lot of economic studies, do you think it's going to have to come from the state down, forcing that through the local cities and counties and all that?
Absolutely. I mean, I think it's a delicate balance, certainly, but I think the acknowledgement is a housing market is regional. So one city can't singularly determine what's happening in the regional market. They can choose to not build housing, which then pushes that problem out around it. And so this regional coordination, I think, is the key to understanding that you can't just think about yourself in a vacuum. If you're a community that typically hasn't built because you've been entirely exclusionary zoned and there are no more lands and there's no middle housing being built, it's easy to say, yeah, we can't accommodate any more growth, so it's not our issue. But I think now this is saying, no, this is a regional problem and it's a state problem, and starting to plan from state down to regions and understanding what that need is for local jurisdictions within the region is a key change to how that thought process now. And in terms of how it's implemented through DLCD and other state agencies, right, all that's still being played out. But I think this first step in just acknowledging this getting some frame of reference for how big the issue is the first step into moving down that path. And credit to Oregon, they've been, out in front of these types of legislative initiatives more so than other states. And you see places like Washington, California, others trying to follow suit. But I think, this is certainly a step in the right direction.
Well, thank you for taking the time to kind of give us a little update. It's always pleasurable to kind of chat and I'm sure we'll be talking. There's always seems to be something going on in terms of, trends. And like you said, the permit activity, we saw that trend happening before, the pandemic. It just continued. But I'm hopeful that there's kind of more of a, people recognizing that the supply issue is huge and real, and that's going to, it has effects, and you can't build housing fast. That's the other thing I think people forget. What's happening today in the permit, new starts and all that, you're not going to feel the negative effect of that for a couple of years. So
that's the key takeaway here is we now have pretty good certainty on what's going to play out. The question is, how quickly can we react to kind of lessen the impacts of that, including policies that might be helpful to help address some of that. So yeah, I appreciate the conversation, and it's nice talking to you.
Good to see you. All right, we'll talk to you soon. Thanks, Mike.
Our entire office specializes in multifamily real estate, making HFO the largest multifamily brokerage in the Pacific Northwest. Your success is our passion. Build your legacy with HFO. Call 503-241-5541 or visit our website at hfore.com for more information.